All right. So first things first, we need to talk, and I do want to go over quite a few topics today that we don't normally address. And the first topic I want to talk about is all of the fear-mongering crash boys that were out there saying the market was going to crash are now starting to say the market bottomed and it's ready to go higher. And this is just a constant reminder that you need to follow what the charts are saying and do not follow anybody's opinions. I give you my opinions just for the hell of it, but I always tell you let the price action do all the talking. And I told you based on the fact that we were in a bull market, this was more than likely just going to be a correction and that we were at very little risk of a crash. And I do think you're starting to see that sentiment is shifting and a lot of people are going to start bailing on that idea that a crash is coming. And I must be honest with you, that does worry me a bit that these people who thought we were going to crash now think we're not going to crash, because typically that is when the market actually does crash. Now, I don't want to get you scared or get into too much speculation here, but I want to remind you that following price action and managing risk is the most important thing that you need to do as a trader. So if you bought into this fear-mongering crap that we were going to crash and you just continued to short the whole because SPY was only down about 8% from the absolute high to the bottom of this correction, and anybody calling an 8% pullback a crash should not be doing any technical analysis, because this is just a textbook pullback within a bull trend. You could easily go down 10 to 15%, and that is still within the realm of a correction, especially if you had a very parabolic bull rally before the correction happened. So more often than not, if you go too far too fast, you will be due for a correction like we just had. But one thing I want to caution you against is just buying into ideas and speculations without having a plan built around price action. That is why this channel focuses on price action and following trend. And while we did have a very high volume bounce on Friday, a lot of that was largely just people shorting the hole that got caught offsides and got short squeezed out of their positions. And if we look at the chart and the price action, we did not even close above resistance, which is still SPY 430. So I will caution you, do not start getting bullish just for the hell of it. Make sure it was part of your plan. If you go back to what I told you, I said it was very low risk to catch the falling knife at SPY 420, knowing that if we broke 420, it was a small loss, and if we rally from 420, it was likely going to be a large profit. That is why I suggested buying at 420, even though we were in a downtrend. And as you can see, that was the correct call because we never broke down below 420. And we had a huge impulsive rally out of that hole. So if you took my advice, you made money, but more importantly, you knew exactly where to manage risk from. So it's not about being right or wrong. You want to be right more than you're wrong, but more importantly, you want to make more money when you're right, and you want to lose small amounts of money when you're wrong, and you really need to practice getting that ratio dialed in just right. Technically, you could lose more than you win and still be profitable if you have very great risk-reward ratios and you do actually win some of those trades. So I really didn't want this to turn into a soapbox lecture or some sort of training educational video. I just want to remind you why it is so important to follow the chart and why it is so important to structure your trades around these critical levels that I give you. So just be cautious of those people out there who are oversharing their opinions, because more often than not, they are going to be wrong, and everybody that was calling for a crash is now backpedaling out of all of their statements, trying to figure out how they're not going to look like a dumbass if we rally out of the low and this was just a correction. So focus on the levels and focus on this critical range on SPY. And I do believe this is a critical range. I am not using the words critical lightly. This is going to define whether or not we go back into a bull market after this correction, or if we are just establishing a very nasty downtrend. So SPY 420 is very critical support, because if we break 420, it is going to look like this head and shoulders is playing out, which means we could easily go down to 407 and probably even lower. Now, if we break critical resistance at 430, the bull should be able to push to 436 and that gap close above 438. If we clear all of that resistance and then we can form a higher low and then continue higher with a higher high, and we do something like this, then this correction is likely over and we are continuing the bull trend. However, we will need to see that higher low, and then we will need that higher low to go into a higher high. And that should be all of the price action confirmation we need that the bottom is in. This was just a correction within a bull market, and we're off to the races for a Q4 rally. However, there is another scenario you should be prepared for, and that is that all of this resolves into a lower high, and then we continue into the downtrend. So this is why I always say be prepared for both scenarios, because if you are a price action trader, You have to follow price action, which means you cannot favor either of the scenarios I just gave you. You need to simply be prepared for both of them and then let the price action guide you on how to trade it. That is the point I try to hammer home each and every day, and there's still many of you that don't get it, but that's fine. Eventually it is going to click, and eventually you're going to understand exactly what I'm talking about. And it is at that point that you are never going to look back from price action trading, because this allows you to manage your risk and be prepared for any scenario. And if you can't be prepared for any scenario, or you are relying on the market to only move in one direction, you are going to end up like those people that were calling for a crash that are now trying to backpedal out of their statements because they really do believe we could be at a bottom, even though we never had the crash they predicted. So try not to be part of the herd mentality that just follows the most popular news articles or headlines or try to scare the hell out of you. Just follow the chart and have a disciplined, profitable approach around price action. So I'll leave it at that. This is the critical range. We're going to know very soon if we break out of the resistance or the support. And if we break that support, this is just going to look like a very powerful downtrend that's just now beginning. But do keep in mind what I said about the possibility of a Q4 rally as long as we can hold above SPY 420. On the NASDAQ 100 triple Qs, we were up 1.68% on Friday, and we did get that very impulsive high volume bounce up to fill the gap, so we can now delete that gap fill. And as you can see, we did not do any progress as far as breaking critical resistance, which is going to require this break above 365 to 367. So yes, that was a hell of a bounce, and yes, we made huge profits because we were long for the bounce. But again, that was just because it was part of our trade plan. It doesn't mean we're magical or magicians. That was simply the risk-reward ratio we decided to take as traders, which was to go long at critical support, knowing that there was a good chance we would bounce and hit critical resistance, and that's exactly what happened. So now we're taking those profits and we're sitting in cash, waiting to see what's going to happen next, and we can instantly get more bullish if we break out of this resistance and continue to form higher lows and higher highs. So there's really no reason to trade when you don't need to. It's time to simply sit here and watch because we're up against resistance. There's a very good chance from here we could see a rejection. And I do think there's still the possibility the triple Qs could go to 347. So I'll leave this arrow on the chart because I do think this is a great possibility, especially because a lot of the bears are now getting bullish. This is the perfect time to throw a pie in their face and just go down and hit that next leg lower. So be disciplined. Don't care if we go higher or lower, because as traders, you could not care less what direction we go. You simply want to make sure you're on the right side of that move. Do not buy into the fact that you have to be a bear or you have to be a bull. Be more focused on what's the best risk-reward ratio. And right now, this is a pretty damn good risk-reward ratio for the bears. So don't be surprised if we see selling and profit taking and we go lower from here. On the Dow Jones, we were up 0.88% on Friday, and this is really just still a dead cat bounce because we have not formed any higher lows and higher highs. So again, these are all still downtrends. The Dow could easily bounce up to 336 and then 341 and still form a lower high. So just keep all of that in mind before you get overly bullish. From here, we'll need to see the bulls breaking 336 and we'll need to hold the support at 331. Otherwise, there's still the possibility we go down towards that gap fill around 322. On IWM, we were up 0.96%, and we are getting the bounce I predicted from 170, and I do think it's possible from 170 we rally towards the gap fill at 180, but that's going to require the resistance break at 174 and just below 179. If we break the support at 170, we start the flush down towards 164. On ARKK, we were up 1.74%, and again, this is really just a dead cat bounce, but if we can break the resistance at 40, this is possibly going to look like some type of double bottom, which should mean we can close the gap below 41 and test that resistance just above 41.3. Any lower, we go to 36, which is the gap fill, and that is where I do believe we are heading, even though we may bounce before we go any lower. On the VIX, we were down 5.63%, and the VIX is crushing from 20, which is what I told you we've been doing all year long. So that trend is still here, which is no surprise because we need to break that trend before we assume something else is happening. If we get to the point where the VIX breaks 20 and then stays above 20, we are likely going to get the more bearish scenario. But in a bull market, you're usually going to see the VIX below 20, and so far that's exactly what we see. So there's no reason to bail on the idea that this is still a bull market. On Bitcoin, we are currently just below that critical resistance at 28,000, and I do believe if we break that, the bottom is in at 25,000 and we're off to the races of higher lows and higher highs. However, we have not seen the price action break and close above that level, so we can't say that we're bullish just yet, but you can stay bullish above this support at 27,000. On Tesla stock, we were up 0.18% on Friday, and Tesla is breaking and holding above this support at 255. And now that we filled that gap, we're looking for the next resistance up here right around 275. If we break 275, I believe we'll go into the 300s, but we do have the gap to fill below 290 and resistance at 296. If we can't hold support down here at 240, look for the next test of support at 230, and then that gap fill just below 218. I really do think there's a possibility Tesla could do one of these things where it forms a lower low, still holds above the previous low, and then goes on an impulsive rally from there. So don't be surprised if we go lower, but you really need to wait until we break down below 255 to assume we are going to lower prices. So use that as your risk level and simply get a little more risk off if we break below it. On Apple stock, we were up nearly 1.5% on Friday, and I told you Apple broke above 174, which was critical resistance, which meant we were likely going towards that gap fill at 181.5, and there's really no reason to believe that's not the case. Now, we do have some critical resistance here between 178 and 179, so up here I wouldn't be buying if you didn't buy down here, but simply wait for that break of that resistance, and then you know we're likely going to fill that gap. Any rejection from here, it is still possible of a lower high down to fill that gap at 167. So as I continue to warn you, don't just assume we have to go higher. These are still downtrends and we are still in the lower high situation, which could easily yield the next lower low. So jumping back over the S&P 500, overall, I do believe Q4 is going to be bullish, but it's still possible with this downtrend that we are going a little bit lower before the bottom is officially in. And if we get a black swan event, it's still possible this downtrend just goes from bad to worse. So understand the importance of following price action and managing risk. And please let the chart do all of the talking. There are so many people who continue to call this market incorrectly, and I would hate for you to just assume these people know what they're talking about and then ignore what the chart is telling you. The chart should be all of the information you need. You should not need to listen to a single talking head or person who thinks they know what they're talking about. And yes, that does include me. I'll give you my opinions, but that doesn't mean they're going to be correct. You should know that I only follow what the chart is telling you. So even if I think I'm right, I don't ever ignore what the chart is telling me because that is how you get into trouble. So just keep all of that in mind. This is going to be a great finish to the year, and I think we're going to crush this market no matter what happens from here, but it is going to require us to stay objective and let the chart do all of the talking. If you want to come crush this market, consider joining the Stocks Channel Discord or Bank Trade Alerts, and you can find out how to join either of those services by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.